So we've got Karen Lazar with us today, and I'm going to make sure that my view is setting so that it'll be a speaker gallery view. I think I pushed it for everyone. So, yes, guys, really, really thankful and privileged today to get to spend some time with Karen as we learn a little bit about condos, the world of condos. I don't know if you feel comfortable raising your hand and saying that you have lost a condo deal in the last 18 months due to some issue that is not actually due to any of your own personal performance. I could raise my hand. It's fresh. I'm like 7 days removed from that scenario for myself. And so Karen, thank you. I'm going to unmute you to make sure that you're good here. But if you would please take a moment, introduce yourself, tell us how you got into the world of like condos, and then we'll move into the little Q&A session that Brett and I have planned out for you.
Yeah, absolutely. Thank you so much for having me. My name is Karen Lazar, and I am the condo and appraisal manager here at Draper and Kramer Mortgage. I've been a condo underwriter, exclusively condos, for coming up on 9 years. I've reviewed thousands of projects, have experience all over the country, in nationwide lending, and have gotten to know and kind of pick up on some of the regional aspects of condo lending, which has been fun. I don't know, I found my niche. I really enjoy doing it. And my favorite thing to do is to kind of pick apart projects and find a way that we can help a borrower get into a property that works well and looks for those ways in with the guidelines, something that meets guidelines but other lenders might not be seeing.
Love it. Do you currently live in a condo?
I do not. No.
Okay.
I've been kind of scarred by the job, so I don't know that I would live in a condo. I've been doing this for 9 years.
Got it. Okay, well, your background is fantastic. I know you're a huge music lover. Let's spend a little time. And Brett, I'm going to ask you, because I'm not super great with like music here, but help me unlock some of this stuff that you got in your background here. It's gorgeous. It's super cool.
Thank you.
Well, tell us what's behind you.
Let's see. Who do we have? We have Sister Rosetta Tharpe is the lady with the guitar. A Ronettes poster, Tina Turner, David Bowie, Mavis Staples, Prince, Stevie Nicks, the Go-Go's, Aretha, Blondie, run the gamut. I figure I spend the most time in this room, so might as well make it fun, right?
Do you play that Les Paul behind you? Is that yours?
I am taking guitar lessons now. I am not good, but I decided this is the year, and I know 2 chords, kind of. Good. I'm working on it.
Once you get that C and that G, you can write half the songs.
Exactly. Yep. It's like 60% of the songs, right?
That's awesome.
And real quick, I just want to just say one thing that I really appreciate about Karen and our condo department. I've been doing this for 20 years, worked with many different companies. I've never had an asset like Karen at any of these companies I've worked with. Usually the condo department consists of a condo questionnaire and a yes or no based on the questionnaire. And that's as far as it goes. Karen has really become an asset in that she can get things done that are usually no, and also cares. And I just really appreciate that a lot. So thank you, Karen.
Oh, thank you.
All right, Karen. Well, I'm going to use myself as the atypical example here so that all the other agents on the call can maybe like learn from. But this week, we lost a client of ours lost a deal on a condo because after we went through the condo process, it was discovered it was non-warrantable due to litigation issues that were based on structural shenanigans with the condo itself and the HOA, right? And so it begs the question, lots of buzzwords, lots of stuff that I didn't really understand too much as like a lender, which is I know why I don't maybe really have to know too much about it because I've got you, Karen, in my back pocket, which also anyone here on the call, if you've got any questions about any condo ever, just reach out to Brett and I, and we can get Karen on the case to kind of help you out with that. That goes without saying, but
absolutely.
Suffice to say, if I'm looking at that, could you please explain to me what actually makes a condo non-warrantable?
So the definition of a non-warrantable condo is just any condo that doesn't meet agency guidelines, Fannie Freddie guidelines. So if it doesn't fit in either one of those boxes, it's considered a non-warrantable condo. The good news is that we have non-warrantable lenders who will lend beyond agency guidelines. But some examples of uh, reasons that projects can get denied, I would say right now, it's deferred maintenance, and we can go into each one of these into some more detail. Deferred maintenance, special assessments, and litigation.
Mm.
Um, the deferred maintenance piece, about back in January of 2021, Fannie and Freddie both released new guidelines post the Surfside condo collapse. And they were temporary guidelines that said, regardless of review type, you have to look at deferred maintenance, meaning that if you get a budget and there's a special assessment, you kind of have to dig into it a little bit further than you had before, just to make sure that we don't have another Surfside situation. Now, with that said, the spirit of the guideline is directed for buildings that are older, like the Surfside building was, and that has structural issues that can make it just outright dangerous. Buildings with open code violations, things like that. Now, those are extreme cases. What I've seen a lot of is lenders turning down projects that have deferred maintenance, like a roof replacement. Things are going to break down over time and need to be fixed. In going with the spirit of the guideline, everything has to be looked at on a case by case basis with these. And, that's the fun part of the job, is figuring out, again, where the pieces can fit and be made to work. If it's downright dangerous, that's kind of the line, anything that affects the structural integrity. I had one the other day that had a special assessment that was worth more than the condos in the project. And it was structural. I mean, it was bananas. It was a $210,000 average purchase point, and each unit owner in a $210,000 purchase point condo had a $43,000 special assessment. It's bananas. And that was a very unsafe project with a ton of structural issues, open code violations, but that's extremes. So the spirit of the guideline is to just do your due diligence, make sure that there's nothing structural or, that's going to negatively bankrupt the project, and generally within those parameters, we can make it work.
Okay, so we're talking about due diligence. I love that segue. Thanks for the auto layup. High five. So if we're an agent, potentially in a listing agent capacity or like the buyer's agent capacity, we're trying to do due diligence from both sides of that like fence, right? What does a buyer's agent, what are the questions that they should ask the listing agent for that due diligence process to maybe head off, the scary gremlins or the skeletons in the closet ahead of time?
I would ask for everything up front. If you can get a condo questionnaire, the contacts, because the sooner that we get the information, the better off we're going to be. Now, if you just want to ask on a surface level, what are the deal killers? I would ask, what is the HOA currently budgeting 10% towards reserves? Is there any pending litigation? Are there any special assessments? And are there any open code violations? I think if you ask those 4 questions, that the 4 biggest reasons for turn downs, you're going to be able to catch at application and, save everybody a lot of time and aggravation, because the whole goal is to catch these things on the front end, so that everybody has the best experience possible. Because, places that a buyer falls in love with, and obviously you want to make the customer happy or the borrower happy always. But I can't tell you how many times that we've done something up front and I've gotten a thank you call saying, thank you for pointing that out. I'm really glad I didn't buy into that. That place would have been a money pit. So, just know that if something doesn't work, we're always working to strive to find a way to do it. But if we can't, it's generally because it's unsafe. And that's the bottom line.
Got it. Okay. So let's flip the position around. So now we're the listing agent, right?
Yep.
As a listing agent who is, right now deals are few and far between to come from. So if someone calls us up and we're like, hey man, I'm thinking about selling my condo, it's tough to not say no to that, right? what are the
Yep.
things that the listing agent could prepare in advance that would aid in that conversation space with the, with the future potential buyers?
Yeah, I would say that the contact for the management company would be fantastic.
Hmm.
That would be a great first start because those are the person that my team can reach out to ask questions, right? And we are a full service condo department. We order docs, we underwrite the projects in-house. So everything is done in-house by my team. And for those phone calls, we're happy to pick up the phone and talk to the agent, up front or whatever we can do to help on our end.
Okay. Okay. Brett, you got any questions, man, that you are burning in your ears for condos?
Actually, can you hear me okay? Because I think I'm having audio
Yeah,
trouble.
yeah.
So, Karen, going back to the example you had earlier.
Oh, Brett, we lost you, man. I think your mic
Yeah.
was on the headphone pieces. Yeah, put your headphone piece in. All right, now talk.
Thanks. Okay, how about now?
Oh yeah, perfect. Yeah, it's great.
All right.
So done. Okay. What I was saying, back to the little example you had a couple minutes ago with the multi-million-dollar fix on,
Yeah.
and that's one of these things. For agents that have a client that's looking to sell their condo and like it comes back and they got this big problem they got to deal with.
Yeah.
All right. The first question of the agent is going to be, well, what do I do?
Right.
Like, who's responsible for this? And how does it get there? What's the steps for something to get so far down so far down the hole that they haven't been dealt with, and now we've got these big major problems.
Like, what could you do more proactively so it doesn't get to that point?
At that point, and then if you're at that point, who's responsible? What's the seller's recourse?
So it's the seller's obligation to disclose any special assessment that at the time of purchase contract on every state, there's a box in there to say, there's a homeowners association. Are there any special assessments? Yes or no? If yes, great question earlier. Purchase contract is a great place to start for any disclosures or red flags that might be on there. For full reviews only, there's a 10% reserve requirement. So 10% of the total assessment income must be allocated towards reserves for significant deferred maintenance. Those reserves are what are for preventative maintenance, for roof repairs, for those, rainy day things that come up so you don't have to take a special assessment. So a lot of times, especially in smaller HOAs, they don't allocate that 10% towards reserves and things just start lining up and lining up and lining up. And then all of a sudden, you have this big issue that comes up kind of out of nowhere. Some better run HOAs are gonna have some money in the bank to kind of help pay for that and maybe not need a special assessment. And others may need to go, whole hog in something that they've been putting off for really a long time, kind of with Band-Aids at some point, just doesn't work anymore. That's how you get to that point.
Got it.
Yeah.
Okay. Got it.
All right. Well, I'm going to put Tom on the spot here. Tom, in your guys' experience, I feel like, man, a few calls ago, you were talking about a huge condo or townhouse deal that you guys were doing up in Minnesota. What do you guys have as far as additional coverages or balloon coverages, or I don't know, I'm using buzzwords here that I think are insurancy, right? But if I'm
you're right. You're spot on.
If I own the house, man, like what extra recourse do I have to maybe protect myself from this type of these special assessments or whatever?
Yeah, so there's actually an insurance coverage that's available on condo policies called loss assessment coverage, and that'll go towards these kind of special assessments. It's not on every condo policy, but it is usually available. So let's say, there's a special assessment for $50,000, and there's 50 residents in the community. Then each resident owes $1,000, right? So this loss assessment coverage is usually placed, I don't know, anywhere between $5,000 and $10,000. So this is something that agents can kind of look at to seem like a subject expert when they're helping their clients look at insurance policies for their condos to make sure that coverage is on there.
Okay. Yeah. And what would they ask? Well, if I was a buyer, what would I ask the listing agent to see? Is there a special term for that? Just
Yeah, so the coverage is just called loss assessment.
Okay.
And again, it's not always on policies, but it is something to look for, especially on condo policies for sure. Yep.
Okay.
A lot of times we'll add it on homeowners policies as well when they're a part of a HOA. Similar thing.
Would, a lot of times we're always asking for like the master policy too for the HOA stuff. Would it show up on that master policy?
So that master policy, if you're referring to the association's policy, this is kind of something totally different. They're not going to have that assessment. They're asking their condo owners to pay for this, right? So it's not going to be something that's
so there's
going
a
to be on the
segmentation here between the general HOA and then the individual's coverage on that one specific thing. Okay.
That's correct.
Okay. All right, Tom. I was gonna say Johnny on the spot. We'll say Tommy on the spot. I don't know how much if that offends you or not. So
happy to be here. Happy to be
here. Awesome. Okay, Karen. Well, whenever Brett and I have a chance to learn from other subject matter experts like you guys, Brett's always the pragmatic guy who's writing down all the good notes and memorizes everything. And I'm always like, how do I take this knowledge and niche down and become the subject matter expert in my field? Right. And to go after and build more clients, with all of this knowledge base. Right. So could you maybe describe some positive ways that you've gotten to work with real estate agents or other mortgage lenders as an added resource so that the folks on the call here know, if they've got a question, obviously they can come to Brett and I, but I'd love to hear some examples of other ways that you guys you've supported other agents.
Yeah. Just in terms of, kind of spreading the condo word, I've spoken at, mortgage banker associations, lots of realtor presentations, just trying to be any resource I can to help you guys close more loans. I really like my job. I like the challenge of it. I love condo underwriting. It's this strange niche that I kind of stumbled into, but, I really do enjoy kind of picking stuff apart and finding ways to make things work. So I don't know if that answers your question, but yeah, wherever I'm invited to speak, I will go.
Yeah, for sure. I have a question. Is it possible to suss out and figure out how, a lot of condo buyers in the Colorado, I should say in the West, because we deal with this a lot in Arizona and California too. The condos happen to be more oriented around first-time home buyers. I know on the East Coast, in New York, Boston, and other places in Connecticut, condos are that's the premium. You're buying those when you've got cash, right? And so in our space, we deal with a lot of FHA. So could you speak into a little bit about some simple steps on how you can double check to make sure, I think the right term is concentration. Am I saying that right?
Yeah. So a really cool niche we've been using a ton lately is FHA single unit approval. So prior to 2019, you had to get an entire condo project had to be FHA approved. To get that approval, you had to submit a ton of documentation to HUD. It was a months long process, and as a result, very few condos were being financed by FHA. HUD kind of realized that there was this, to your point, a huge market of folks that weren't allowed to be in the condo space. So they introduced in late 2019 what's called a single unit approval. And what the single unit approval is it says that the entire project doesn't have to be approved. We can lend on just a unit in the project. Now it has to meet certain FHA qualifications, like it has to be more than 5 units. No more than 10% of the project could have these single unit approvals. Really basic stuff, but nothing beyond the scope of I would say a traditional full review. Now, the cool part is we can do those in-house. FHA just looks over a questionnaire. As long as we say it's okay, we can rep and warrant that here. That's been a huge value add because those people who aren't being served before, if a project isn't FHA approved, we can help get it approved through the single unit approval. We can also send out a link to everybody on this call to see if the FHA project is approved. It's just a quick HUD lookup tool. where you can go type in a zip code and see what projects are FHA approved. And those are kind of the low-hanging fruit, right? Like you can go there, if they're approved, all you need is a master insurance policy and you can kind of take the condo piece out of it. So, if your realtor partner has a borrower looking in a certain zip code, you type in the zip code, these projects are FHA approved, and it's just, kind of low-hanging fruit.
Hey, Karen, if a condo can't go through conventional, get a conventional condo approval, can you do a spot approval with FHA on that same unit?
I'm sorry, I didn't hear you.
No, if you so you've got a conventional loan that you can't get approved.
Yeah.
Can we use an FHA spot approval on that condo?
It potentially, yes. It depends on the reason why, right? Like if it's a make or break, like let's say there's structural litigation and there's a code violation, that's going to be tough to finance anywhere. But if it's like, I'm trying to think of an instance where something might work FHA and not conventional. We can look at it on a case by case, but really there's not a ton of difference. Potentially, yes, but we would have to look at it and see what's going on.
And then how about VA? What does VA require?
So VA is actually pretty great. We've done this year, I think, already 8 or 9 VA approvals, and VA, we can help you get the entire project approved with VA. The cool part about VA, they're much, much easier to work with than FHA because it's veterans helping other veterans. My team will request the docs from the management company. We submit the docs to VA to get approved. We'll scrub them, submit them for you. It takes about 3 weeks. It's been running about 2 to 3 weeks once all docs are received. And once the project is VA approved, it's approved for life. And that's a really cool benefit to our borrowers. So if you ever want to refinance them down the road, if you have another veteran that wants to move in there, you do the legwork once, and with VA, you never have to approve it again. Again, more low-hanging fruit. If as a realtor partner has a veteran that's looking at condo projects within specific zip codes, you can go to the VA lookup tool, just type in that zip code, search, and it'll show you all the approved VA condos in that zip code. If it isn't, reach out and we could definitely reach out and potentially get it approved. Again, a much, much easier process than getting a full FHA condo approved. They're just great to work with. I love working with the VA. They're good guys.
Yeah, Eric, if you've got a question, man, come off of mute, buddy. Yeah, go for it.
Yeah. So can you guys hear me okay?
Yeah.
Yeah.
So just to kind of bring it full circle. So let's say we have a client that really loves a condo and we go to look and it's not FHA eligible. Going back to what you said a minute ago, what is the route to take to see if we can get it? What did you use? Single unit approval. Is that going through you, going through our lender? How does that look practically?
So it would be a lender must submit a single unit approval. So you have to have an active FHA license. Like we'll submit it to VA on your behalf as the lender. And it's the same as any other condo project. We review the questionnaire. It's called the 9991. That's the FHA single unit approval questionnaire. Budget, master insurance policy, and the decks and bylaws. Those are the requirements, but we'll do a full review in-house. Everything looks good. We send the questionnaire into HUD. After about 72 hours, they make sure that there's nothing crazy on the questionnaire, but we've already vetted it, and they'll release the case number. And again, that's been a huge value add because pre-2019, those folks, if the full project wasn't approved, it just disqualified them from VA, FHA financing. So this has opened up a ton of doors, and especially in this market where, those first-time home buyers are going to be looking at probably more condos and townhomes than ever because of the price points and obviously rates being what they are. Having this FHA tool in your back pocket could be really beneficial to your borrowers.
So on the listing side, let's say, we're going to list a condo. It's not FHA eligible. Is it one of those things where would we be able to know ahead of time if it's eligible for single unit approval?
So what I would do is reach out to one of these guys and they'll be able to reach out to me. And what I'll do is see if we've reviewed the project before. And if it's in our database, you know, we have thousands of projects in our database. We can go in and search those and see if we've reviewed it before. And that's definitely a good place to start, right? Because if we reviewed it in the past year, I can say with some certainty whether or not it's going to qualify for FHA. But I would definitely reach out to them, see if we've reviewed it, and kind of how get the first steps and see if we can get that going for you.
Okay, perfect. Thank you.
Yep.
Awesome, guys. Well, does anyone else have a question they want to ask Karen? Don't be shy. Don't be shy. Thank you, Eric, for that. It was really insightful.
That was a good question. Thank you.
Great question, man. Yeah, you know, I do think that there is like there isn't a level of like stigmatism that all of us on the call are gonna have to fight off with you know, our other referral partners, clients too, that condos have got a kind of a bad rap in the past like few years. It's certainly in the areas that I live in and work and play, you know, mostly, that it's just so many crazy things can happen, and they you know, the deals blow up at the last minute, right? And we never want that for our clients. And yeah, it's tough. So I appreciate you, Karen, asking and helping us understand, you know, how to deal with a lot of that stuff.
And Karen, going back to, I think you made mention of that $40,000 assessment that was slapped on each end of this. I think a realtor friend of mine was actually involved in that. My question is, what recourse does the homeowner have if they didn't take a special? What's the thing, Tom? You were talking about the. I took a note on it, but I can't find it.
Oh yeah, the special assessment insurance.
Yeah. So what's the recourse if they don't have that loss assessment in place? I mean, are they just stuck with that bill? What does that look like?
Correct. Yeah, unfortunately, that would have to come out of pocket.
It's crazy.
Eek.
Yep. Oh, I think we lost Karen.
Did we? All right. Well, Brett, did you have any other comments or things that you were gonna try to ask Karen? We can, if she pops back in, man, we can hit it up.
I think it's just good to get that information. I mean, condos are one of those things that, you know, if you're doing anything in Colorado Springs, it's always tricky. We've got a stigma out here for condos, what we can and can't do. It's great to know that the one-time VA approval is huge for the amount of veterans that we service.
Yeah.
That's a great thing to know. And Tom, I never heard of loss assessment insurance before, and that's something like that is going on in my conversation with every one of my condo people. And I'm going to go back and start calling. Can they go back and can you place loss assessment insurance onto a property after closing?
Yeah. So typically, sorry guys, I have my window open and a loud motorcycle just drove by. Typically,
too, buddy.
Typically, it kind of depends on the carrier, but normally they will let you add endorsements further down the road to your policy. Most of these coverages, especially loss assessment, is something that you can endorse at any time. Yeah, if you're worried about it.
Okay. Yeah, it's something I've never chatted. I've never had that conversation before, so I'm gonna start calling some folks.
Yeah, I think, and another interesting thing would be that once the VA has approved that specific project, it's good to go for a while. But that the knowledge of that actually being approved is so like, that's totally in a stovepipe of excellence. Because it's not like we do a transaction and we tell everyone. Like the only way to know is if you go to that VA search tool. So I'll make sure